It is 10 o'clock. I'd like to call the Finance Administration Committee meeting to order. At this time, we'll entertain any public comment. Seeing none, entertain a motion for the consent items, approval of the agenda and approval of the last minutes.
So move.
Or additions, corrections? All in favor, say aye.
Aye.
Aye. All opposed, same sign. Motion passes. Action items. Election of a vice chair. Need a motion to or accept nominations for vice chair of finance.
Chairman, I'd like to nominate Commissioner Roger Bergman as Vice Chair of the Finance and Administration Committee for 2022.
Thank you. I'll support that. Any other nominations? Any other nominations? Nominations are closed. All in favor of Roger as vice chair, signal or signify by aye.
Aye.
All opposed, same sign. Congratulations, Roger.
Donuts next month.
Big in the blankets next month.
That'd be good.
Big in the way.
Bunket.
Blanket, okay.
Need a motion for the 2021 and 2022 budget adjustments.
So move.
Karen,
Yes,
you're spending an awful lot of money.
there is a lot of budget adjustments here. Remember, we missed December. So the majority of these budget adjustments, I'm going to talk about a couple, but the majority of them we are truing up our grants to what we actually were awarded compared to what we estimated at budget time. But there is the substance use in 21 for $549,871. That budget adjustment, we were, the county collects the state convention tax. 50% of that is dedicated to substance use SUD funding. And the county sends that to the LRE. Well, we were trying to cost settle CMH with the LRE. We had never cost settled since we had gone to the LRE form of being our partner. And so there was some question, especially when the LRE did not have a lot of cash flow, that they were holding that money. That money is SUD money for Ottawa County and Ottawa County grants and residents only. So we were asking them to put it into a separate checking account and show us that it's set aside and separate, because we didn't want it seeping into their cash flow to solve other issues when they were having cash flow problems a few years ago. We finally, this past, I think it was late November, early December, everything is settled with the LRE. We have now, they've agreed, they've put this separate in a separate bank account. It's completely separated from their operating cash. And they've given us a reconciliation for each county of who shares what in that cash account. So that is, that's been like a 2-year effort on Keith Falkowski, the financial manager over at CMH. So we've been working hard with Lynn on that. And so I feel like that's a great, I'm so glad to adjust this budget and get that issue resolved. The other big budget adjustment we're asking for is there's Arpa funding in 21 and 22. That is the combination of both of those budget adjustments is 19 million, just over 19 million. It is the lost revenue. And we're going to talk about that on item 5 of the agenda, but that's Arpa funding that we're asking to have appropriated in 21 and 22.
Okay. Any questions for Karen? Thank you, Karen.
Mhm.
Seeing none, all in favor, say aye.
Aye.
All opposed, same sign. Motion carries. Need a motion for the statement of review.
Or
Questions, comments? All in favor, say aye.
Aye.
All opposed, same sign. Motion passes. Need a motion for the quarterly financial status report.
So move. Support.
Karen,
This is the fourth quarter ending September 30th, 2021. And we are under audit. The auditors will be here next month. A final statement will be presented. Generally, we do that at the April finance meeting and the April board meeting. But this is a preliminary look of how the funds are at this moment. Again, we're a little further along just because of the timing. I would normally present this in December. For the general fund, we are just about at a break even. So revenues equal expenses, and they're actually a little lower, but I think there's a few adjustments that by the time we're done, we're going to be just about equal. I would just remind that we actually ended the year. A few of the things that we did during 2021 were like one time. So we had in the spring, we had brought to the board the fund balance policy. We had exceeded our maximum. And so $2.7 million in the general fund was sent to the capital projects fund. So that shows up as an expense in 21. So had we not consciously sent that money to the capital projects fund, we would have been $3 million higher. That $549,000 that I just talked about, that was actually revenue from prior years that was spent this year. So these categories of fund balance that you see that I'm talking about right now are not the undesignated fund balance, which just basically means the usable. That's what our fund balance policy is based on. So when you look at breaking even, we're actually in a much better position when you just look at the small usable category of fund balance, if that makes sense. So, I think all of those adjustments to be made, the undesignated fund balance is probably going to go up about 3 million. So I think, all in all, it'll be good. And we'll cover this more when the actual financial statements are audited and Peter Hefner comes to talk to this committee.
okay. Any questions for Karen? All in favor, say aye.
Aye.
All opposed, same sign. Motion passes. In a motion for the use of ARPA funds for public safety payroll.
So moved. Second.
You're a busy person today, Karen.
Yeah. So the ARPA funding, as everyone knows, the county received 57 million. We brought forth a process and said that we were working with the ARPA task force and identified those 5 buckets. There's something we really didn't talk about at that time. There is a eligible funding category that's lost revenue. And we do those calculations 4 times during this time period when we can spend ARPA funds. The first calculation we did was 19 million in lost revenue. And I think we've talked about that a little bit, John. It's a little bit about the timing and how the calculation is done, the lost revenue calculation. So we're following the federal guidelines on how to calculate that number. That is an eligible expenditure category under ARPA funds. So $19 million that we've calculated so far is considered lost revenue. Spending those dollars is a little less restrictive. So you can spend those dollars. There's a few things that you absolutely cannot spend it on, but in general, lost revenue can be spent on direct services to the community. So for example, public safety payroll. And so our suggestion, our request is that what we do is it's much simpler, the administrative burden to submit under the lost revenue designation is easier. And actually in the final rule, just to make it simpler, the federal government, when they reissued those rules, they said, anybody, no matter what your calculation, you don't even have to do the calculation, you can apply $10 million to lost revenue, which really makes it easier for smaller communities to manage those ARPA funds, which is a great thing. But for the county, we received 57 million. I think by the time we do all those lost revenue calculations. 100% of our 57 million technically could be spent as lost revenue. So what this agenda item is doing is it's requesting to submit and pay, submit expenses under the lost revenue calculation. That would be public safety payroll, and to any savings that is received after we submit expenses under the lost revenue, the Board of Commissioners would commit those same resources, and we'd set them aside. And you would, by a board commitment, we would track them separately, similar to the 0.3 mils that that was dedicated towards paying down the DB liability. This could be set aside and tracked separately. And then when we received ARPA funding projects from the ARPA task force, they would be awarded based on those funds that the board has set aside and committed to that activity. We originally had a conversation with Doug Van Essen about, can the county do all those projects? And he has looked at it, and without knowing every project that's going to be submitted, he has come up with, he thinks that we can, under certain things, fund certain projects. If there was a project that was submitted that asked for funding that we wanted to proceed with, that we didn't have the statutory ability to do with county dollars, we would actually have to follow the ARPA rules then. So we would, obviously we have time because there's only $19 million of lost revenue at this point. We're doing the second calculation this month, so we'll know what the 2021 lost revenue is soon. But administratively, it's significantly easier for us to report and do all the legwork on for the lost revenue, and under these direct services that the county provides, it would save, I won't need to add new staff. Paul Sachs won't need to add new staff to do all the reporting and the requirements. And then we would manage the other projects as county projects, but still bringing them forward to the board. So that's what this agenda item is asking. So then 19 million that we've calculated that is lost revenue, that's why I've asked to appropriate those funds, because if we can find things to submit that are eligible under the lost revenue calculation, we'll submit them under ARPA. ARPA will be done. There's a first report that's due January 31st of this month. So we would submit these expenses.
So Karen, the projects that we could be working with, this would enable them to have an opportunity to do these without the onerous record keeping that could be without something like this.
Correct.
So this is an opportunity for us to save a lot of money in terms of record keeping, staff time, not just for the county, but also the people that apply for these funding dollars as well. Is that correct?
Yes, that is correct.
Okay.
We spoke with a consultant who's coming that was hired by MAC, and we still think there's potentially a possibility of having a relationship with them contractually at some point for maybe other funding, because they seem to have a good handle on funds that are available, maybe to marry up with some of our projects. But they were willing to come in and handle like the day-to-day. I think they were in small communities maybe that wanted to spend some dollars and follow the rules and had a project they wanted to do and just didn't have the capability in-house to do that. They were suggesting 1% potentially could be committed towards administrative. Well, that's $500,000. I would much rather dedicate that to actual projects than hiring a consultant, hiring an additional accountant or someone in Paul's office to help us track all the KPIs and all the metrics. So it's administratively easier to process in this manner.
Yeah, good, thanks.
So once it goes to revenue loss, Karen, then that part's done with that 57 million, correct?
Correct,
And whatever goes into the general fund, there's no stipulations, right?
correct.
So that's.
Now,
huge.
this fifth agenda still designates it under the 5 buckets that the board had originally identified. So if we came up with a 6th bucket, we would have to amend this because a board, when a board makes a commitment of fund balance, you're making it for a specific thing, similar to when we committed the 0.3 mils to the paying down of the DB liability. So this would be committed to those 5 buckets: the county, the business, the broadband, and social human categories. So the idea is that commitment, but it does eliminate, for example, the spending of the funds by 12/31 of 26. So being committed by 24 and actually being spent by 26. If we certainly could follow that timeline, but if we wanted to or did not, it doesn't have those restrictions. So it doesn't have the same restrictions as the ARPA funds does.
You're thinking it could come up almost to the total amount if we really did all the calculations?
I believe that we will have lost revenue in excess of 57 million. So we could submit all the expenses under lost revenue if we chose to. So my thinking is the timing of we'll know our projects before we ever, we're right now with the ARPA task force, we're ready to release that RFP to hire that bucket manager to work with us. I'm expecting projects, maybe late spring, early summer,
Right.
by the time they come on board, get under contract, and then we have projects submitted. Maybe it's summertime. I guess I don't, but sooner than I would do all my lost revenue calculations. So if there's a project that we want to fund that we can only fund because we have ARPA dollars, we would hold back. But I believe if that's not the case, if all those projects, we can do the other way, that we could have 100% under lost revenue and then designate these funds.
Well, that way it would give some available money for the courthouse if we did the lost revenue into the general fund, correct?
The courthouse is eligible under lost revenue. It's also eligible under it's eligible either directly under ARPA
It is or
or
not?
under, it
Oh, I
is.
didn't think it was what they explained last week. Okay.
Capital infrastructure is eligible under lost revenue. Yes.
If you have matching fund, if you have bonds, is it still?
You cannot pay the bonds so once you issue bonds, you can't make a debt service. You can't pay bonds. You can't pay it on taxes. You can't put it away in a rainy day fund. You can't,
But we could take, just say 10 million of the funds, the ARPA money, and apply it to the project and then bond the balance, correct?
under the lost revenue, that is an acceptable spending
We
and
just
on
can't
infrastructure.
Bond it and then
You
take
can't
the
pay
money
yeah,
and
right.
pay it.
Exactly.
Question, Karen, once we figure out what we lost for 21, we'd be able to do the same thing again for 22.
Correct.
I mean,
Right.
so basically we're just shifting money to, so we have less reporting requirements.
Right. So we are spending the ARPA dollars on the administratively easy things to submit ARPA dollars for.
Yep.
And then the board is committing those same resources to the projects that the ARPA task force will bring forward.
So when the board funds those projects, if it's from general fund or money from the general fund, are those in the form of a grant or a contract? How?
It's contractual.
Okay.
It would be a contractual relationship. I think less of a grant. So I think what Doug had talked about was, the county has the statutory authority to invest in broadband. So if the board, for example, if a broadband project was on the list of projects to be funded. We may set up a contractual relationship with someone to assist us, depending on what that project looks like. There would be all the normal things when we spend money, contracts, separate accounting for all of that. And we little bit in the weeds, but we do set this up to track separately. So that 0.3 mils, I track that in a very separate place. So if I ever have to talk about how the board's commitment and how it's spent, we can show that.
So the money we're saving by using the ARPA money will basically not necessarily go into a restricted account.
It's not restricted, it's committed.
It's
So
committed, okay.
there's three restricted is legally restricted. So the ARPA funds are legally
Okay.
restricted. And the committed funds is the Board of Commissioners is making a commitment to spend these funds on a specific area. And to change that, they would have to change it by additional action. And then the third area is assigned, and the assigned fund balances, the county administrator has the ability to assign fund balance. So like, for example, in the consumer power law appeal, we did not want to spend those resources. So we held them back. So it allows you to designate areas of what your fund balance savings is. So this is one of those categories.
Okay. Any other questions for Karen?
Quick, Karen.
Yeah.
Does this action request, is this creating that that committed fund?
It's creating the commitment. Everything I do to track is just to support that.
Okay, so once we pass this, then you'll create the committed fund.
Right. Any
Okay.
savings that come out, we
It
will
just says here
set.
that the will be designated by the Board of Commissioners. So this is the actual designation process.
It's the designation
Okay.
process, yes.
And then every year as we go through, whatever you can apply to lost revenue will go into that committed fund. As we
Yes.
roll through the years.
Yes, the committed fund is really just an accounting.
Right. I know we
Tool.
talked about that.
It gets reported in the general fund.
Right.
I mean, this commitment is a general fund commitment.
Right.
Me doing it in a separate location is just
But
strictly.
we'll be able to see that fund
Yes.
separately.
Mhm.
Okay.
Anyone else? No? All in favor, say aye.
All right.
Aye. All opposed, same sign. Motion passes. Discussion items, Finance and Administration Committee meeting schedule. We're currently the third Tuesday of the month at 10. Is that okay with everybody yet?
Yes.
Yep. Okay. We will continue that day and time. Treasurer's report, Amanda.
Morning.
Morning.
Thank you.
You need one of those little rubber tips for your finger.
Just so you know, I'll quickly refer to a couple things. China's, I think in advance of the Olympics, is doing a kind of a shutdown. So that's really affecting a lot of the supply chain. Anybody shows up for work at one of their facilities, they're basically closing down manufacturing, ports, that kind of thing. I heard one economist say that after the Olympics, maybe things would loosen up a little bit, but they want to present a face to the world before the Olympics. Omicron cases in the UK have already peaked, so that's a good sign for us that maybe they're a little bit ahead of us and we're going to be peaking soon. Some of the domestic indicators that, inflation, you've heard that inflation's at 7%. Central Bank is going to start raising interest rates. And I thought it was going to be maybe a three-phase interest rate hike over the year, but now today I read something that said maybe 4 interest rate hikes, maybe April, June, September, and maybe November. So that's good news. So just, it's like, I got an email today from one broker that said a 5-year treasury is at 1.87. Thank you, Lord. Let's see, what else? Yeah, so the important thing to read on this sheet, I think more overall, is the yield curve on the second page. Is you can see the difference from a year ago in the black to the blue line. And where I usually invest is 2 to 5 years out. So you can see the difference in the rates that we're getting right about there. So that's really good news for our portfolio. And then I just highlighted, this is just a really interesting thing. Yesterday, President Biden nominated an MSU economist and professor to serve on the Federal Reserve Board of Directors. She would be the first African-American woman to serve on that board in the history of the Federal Reserve. So I think that was pretty cool. It's local. She already serves on the Federal Reserve Bank in Chicago, but I thought that was pretty cool. Somebody local. Interestingly enough, though, this was really interesting too. The first African-American man to serve on the Federal Reserve Board also came from Michigan State. So that was interesting. Wanted to let you know about one other program that the state has now funded and will go live. It's called My Half, the Michigan Homeowner Assistance Fund. That's come up some of the federal ARPA dollars that state has put towards housing, foreclosure prevention, defaults, displacement, payment of utilities. So that's about $242 million that will stay at the state level. We will administer that here at the county. So for instance, if somebody comes in and says they can't pay their property taxes, they're behind on the utilities, we can have them access these funds. It's a application process. They get up to about $25,000 per person for this. So just to make you aware that that's out there, we'd have to, it's very similar to the earlier program that just actually terminated last year. So step forward. And so now this is a new infusion of dollars to help folks who are really experiencing some issues. The Step Forward program had a lot of, I think, hoops to jump through. And not everyone that was behind on their property taxes would qualify for it. This one seems a little bit broader and can be applied to utilities, homeowners fees, things like that. So it's just a good resource.
So Amanda, how do people find out about this that are in need? Does your office help them
Yes.
find this source?
Yep.
How do they qualify for it?
We're finding that out. There's an application process. We haven't had anybody go through it yet. So it's just starting now. There are a couple of agencies throughout the county, one up in Grand Haven and then one in Holland, that will help people that are experiencing these hardships. They'll be aware of it as well and can help them refer people to us. So we'll let them know about that.
Amanda,
Yeah.
on that program, will it pay back taxes and bring them current,
Yeah,
or just enough to keep them out of foreclosure?
it will. We're still trying to figure that out. It begins, I believe, after January 2020. If you experienced hardship after that date, then you can apply for these funds. But your back taxes would be due your taxes would be due February for the previous year. So we're trying to figure that out and decipher that what they're saying to us right now, but I go to a conference in about a week and a half where they're going to present on this program. So we'll have a little bit more answer right then. So
So at our next meeting, we can hear a full report.
you can.
Okay, right.
It's, and they describe it, I'll just give you this one comment, that they describe it as a waterfall. Funding waterfall, mortgage lien delinquencies, land contract delinquencies, manufactured home delinquency, paying for those, property tax delinquencies, condo association fee delinquencies, housing related insurance, utility delinquencies, including electric, gas, home energy, water, and internet broadband services.
That's a lot
It is.
of coverage.
It is. So you wonder, how does this fit with what your ARPA monies are coming here to the county? And there's the state buckets plus our ARPA buckets. The state is swimming in cash right now. So any other questions for me? I'll send you more, I'll send you a PowerPoint of this this is a 6-page PowerPoint that my half prepared for us a couple months ago. So I'll send that all to you.
Good. Thank you, Amanda.
Mhm.
Paul, did you have anything?
No, I did not.
Okay.
No, thank you.
Second opportunity for public comment. Seeing none, I would entertain a motion to adjourn. All in favor, say aye.
Aye.
Aye. We are adjourned.